Hey, it's Clay, and this will be a video chart on ticker symbol FLKS. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame, and it's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I'll be the first to admit this one is pretty sketchy. It's kind of a shady chart because, yeah, the price did make a great move in the upwards direction, but then it did also pull back quite a bit. But it's not like it was a crash, but it did pull back quite significantly. So what I want to try to do here is just kind of focus on a level that I think will help, or at least help me clarify the sketchiness of, if you will, of this chart. And for me, the level that can really help out in that regard is down here at 52 cents. Why is 52 important? Well, let's look at a couple different scenarios. I'm not saying this will happen, but let's just say, for example, that the price comes down to 52, breaks below it, and then just continues to separate to the downside. At that point in time, what would you have? You would literally have the price right back in this area where it was before the breakout even started. And not to insult your intelligence, but price movements that go back to where they were, not exactly a sign of true strength. In fact, in my mind, that would turn this chart into a pump and dump, meaning the price has made a great move, and then all of a sudden, within a short amount of time, the price is right back to where it started. That's literally what a pump and dump is from a price action perspective. So that's kind of the one scenario. Now, again, like I said, I'm not saying that's what's going to happen, because on the flip side of things, let's say the price actually comes down to 52, behaves in that manner, and then starts to work its way back upwards. Well, now what would you have in this situation? You'd have a set of lows here. You'd have some lows right there. If you picture each of these as stair steps, well, hey, now you have progress being made in the upwards direction. And that's what bullish moves do. So in other words, like I said, 52 cents is kind of the vocabulary definer. It's going to be telling us, is the price making progress, quote unquote, which is bullish, or is the price, quote unquote, going back to where it was, which is obviously the bearish scenario. So if you haven't connected those dots, 52 cents, definitely a very important level. And that's kind of the line in the sand, if you will, of whether or not this chart is making progress or going back to where it started. So let's see if the price can stay above it or not. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.